All right, traders. Very good evening to you all. This is Avril from the Tradepsyche. It's 6:41 p.m. Friday, right? Today is 13th of February, and I welcome you all to the post-market analysis, outlook, and expectations from the market for Monday. All right. So if you can see on the screen, what a dramatic market today, right? And probably I have on my screen each and every sector today, right? And the stock markets are literally bleeding, right? Even like just as how we discussed in past weekly analysis video, and even from past if you have been seeing past 2 to 3 daily analysis videos, we have been continuously saying about the fear, that what fear we have in the markets, right? And there's not even a single sector which got spared today from the bears, right? Each and every single sector bled today. Even if you see even the sectors, when the main sectors they bleed, right? Some sectors, they act as a defensive sectors, they also bled today. If you talk about commodities, if you talk about FMCG, generally FMCG, defense, these are the defensive sectors. When IT, banking, these sectors, mid cap, small caps, these sectors fall. The protective sectors are defense, commodities, maybe FMCG. But today there was not even a single sector which got spared from the bears, right? So, and if you guys have been a regular viewer on this channel of my analysis videos, you must be knowing that from past couple of days we have been discussing that our bears making a comeback, whether we are actually in a bull market, or this up rally from the lows of 24,500 was a bull trap or not. And we discussed that in our past weekly analysis video. I'll take you to my last video, wherein we discuss the same, right? So the stock markets are literally bleeding, and there's not even a single thing which can stop the market. Even the trade deal has happened. So now you all, I think, must understand that the positivity in the stock markets was not about the trade deal. The positivity in the stock market was not about a personal income tax cut, right? The positive was just a trap, probably, unless if we cross again all time high next week, because the markets are, specifically in the year 2025 and 2026, probably mostly have been unpredictable, right? So welcome to the weekly analysis video. This is Aviral, and we're gonna discuss some of the crucial levels for Monday, and as well as for the next week as well, right? So levels, I think now, if you have been a regular viewer of my videos, I think we won't discuss much on the levels. We will discuss majorly on the sentiment, majorly on how to figure out that the markets can fall, because once you study history, once you study patterns, then and only you will understand that how to anticipate what is coming next for you. So let's start the discussion. Before starting the real discussion, I'll be leaving the link to my Telegram group in the description box below. We are running 90% discounts for the ones who want to try our market. So we'll also discuss in this video that what we discussed today for the Friday session in our Telegram group, right? And we'll also just have a look that what analysis, what kind of anticipation we gave, and the fear which I had for the markets, it is exactly coming out, right? So let's go to my Telegram group, right? Today, when the markets were starting, we and prior to that, I think, if you guys read the markets ending commentary, right? What a dramatic day. Crucial support is now 25,750. The bulls have shaken today. It all depends on the global markets today, on how they perform. 25,900 remains a strong resistance, and 570 remains a support as of now. Overall bias, sell on rise. This was yesterday's ending comments, and today the markets opened 130 140 points gap down. And yesterday's video we released also, we mentioned that is this the bull trap or not, right? Today we mentioned that excessive shorts have been added, and for the first time after I think 3 days, FIs also shorted the market in index futures, right? So this was something, there were many factors which were indicating that yes, the markets can be bearish. As clients are aggressive bullish, we can see a bearish day. We gave the analysis, right? All right, traders, 150 point gap down will be opening roughly around 25,650. And I really feel, I'll go to probably 5 minutes, and I really feel pity for Indian markets. While I'll tell you, see what happened today is the whole day market we opened gap down, right? And if you technically see, we didn't do anything. If I'll go to early time frame, right? One, two, three, four, five early candles in single range. And if you see from early time frame, you might say that it is easy to trade, but on a 5 minute time frame, when the market is in a like from 25,500 to 25,600, when the markets are in a 100 point range, what will you trade, right? So if you essentially see today, when the markets got over at last, I think if I switch to 1 minute time frame, right, markets tried to break 25,500 like for I think 15 minutes. It didn't break, then it trapped it. I think for intraday traders it was a difficult market in the markets which were actually trapping the ones who who wanted to go short on the intraday basis. If you actually see, let's suppose I'll go back to 5 minutes time frame, right? Let me yeah, now it has switched. So if you see here, the markets tried to break the level of 520, it went till 514. So someone who would have shorted here, seeing that yes, the markets are actually bearish, he got trapped here, right? So that's why I feel sad for Indian markets and the people who trade on an intraday basis, that right. And even if the ones who wanted to short here, right, they got trapped. Multiple traps were created for the upside, and then finally when the breakdown came at like after 3 p.m, like what is the sense of even opening the terminals, opening the systems in the morning, when the markets wants to just gap down and do some action at the end of the day, right? It's a pathetic market for intraday. And if you take 5 sessions, right, if you take yesterday's session, we were sideways till I think 2 o'clock. The movement came 2 o'clock. I think day before yesterday we were fully sideways. Day before that only we were fully sideways. Then prior to that session we were sideways, gap up and slight move, right? So nothing is happening. This whole complete session was sideways. So I think the markets are not making any opportunities on the in the intraday basis. Everything which is happening, if you see these 3 sessions, doji candlestick, from where the market started, it ended there. This also went up but came down, then again gap, then again gap, then this gap got created, this big gap got created, after that gap down happened, right? Then these 3 candlesticks, because after this markets touching 26,300, nobody will have the guts to short the market. Everybody will try to go long, because of course we are very near to the all time high, but then again it trapped. So this is a note, and I feel really, I really feel sad that when the markets are open, when the markets are live, people are not getting any opportunities. None, anyways, what can we do? These are the markets, and the markets are gods. Market is god. We have to trade the markets the way it is, right? And nothing can be done. It's just the way things are, right? We cannot do anything other than this, right? Now, yes, coming back to the it's Telegram discussion, uh, right? And then the game plan today, we discussed that we are opening a 150 point gap down. We'll be opening roughly at 25,650. 1 hour will be volatile. That's what it happened. And too many, as the markets had too many long because of the trade deal, then blah blah blah. Below 25,500, if we start to sustain, the single strategy today which we wanted the market to do was sustain below 25,500. And when it did that at the last, the whole day, because of course when the markets are opening 150 point gap down, you really cannot go further, and without a good bullish pullback you cannot short, right? So this is always we discuss that whenever we open a gap down, the first high of the day becomes a good resistance. So naturally 25,600 was a good resistance, and this we discussed in the Telegram group as well. Like if you see the first hourly analysis, we are seeing a support at 25,500, as we talked about. in the morning itself, but largely there are still huge addition of shorts at 25,600. So consider 25,600 a good resistance and 25,500 as a decent support. We can be grinding in this range till second half. Perfect anticipation. Till the second half, we kept grinding in this range, and exactly just after 3 p.m. I anticipated that yes, as usual, we'll break down of this range around 1:32 p.m., which is the institutional time. But today markets crossed all the limits. Right. So I cannot I cannot comment on this, that when to trade or how to trade. But this was the discussion we had. Nifty is in a very tough spot. On upside we have today's gap, on downside we have budget gap. The question is, which gap will be filled first? We mentioned, okay, this is the analysis we gave in this one. We mentioned that if you see this bank nifty chart, we were in a box range. If we break 60,440, bank nifty can also go for gap covering. So exactly bank nifty broke down, and if I take you to the chart today, exactly the gap has been covered today by bank nifty, right? And the box range trade, we'll discuss this on bank nifty's chart. The box range trade, like, it just executes very beautifully, right? Very beautifully. The box range trade and the moving averages setup, we'll discuss everything in detail, that how do we do this and how do we trade on this, right? But if you naturally see, we posted an update here that any breakdown below 60,440 will be resulting in a move till 60,000, and exactly that happened, right? So this was the drill traders, right? So let's come back to the discussion for of and we discussed that only HL is a stock which is green. Then we discussed that what is the timing profiling, right? And then post that, right, we discussed somewhat about the VIX. Then we posted markets mid commentary. The markets have become more bearish after sustaining the gap down. The most crucial level to monitor now is 25,500. If we break down this level closing basis, then expect Monday to be also gap down. Let's see. We have closed down on the closing basis, but let's see what happens. Nifty OI data is very bearish as of now. We posted this at 2 o'clock after seeing 8 CR addition of shorts and only 2 CR addition of longs, right? And then also we discussed, if you see past 10 trading sessions, 20% of the sessions had some intraday move. So it's a waste of so it's a waste trading intraday, right? Of course the intraday traders would be totally broken. Why? Because on one hand side, they follow the and discipline that will not carry over the for the next day, because the markets are moving in a gap. But if they are not carrying, they should get the opportunity on the intraday basis, right? Then I also mentioned, sometimes I feel petty for Indian markets. No action, just moving with gaps, totally dependent on the US markets. Right. Then we posted the ending comments, whatever it was. Right. So this was the discussion we had in our Telegram group. And now let's start the discussion for next week. I'll shift basically to the weekly chart. I'll remove all the levels. Right. And the candle formation, right? If you see, we have, within the last 2 days, basically, uh, I think this is Friday session, Thursday and Wednesday session. We formed a red candlestick, and if you will go and look at my Tuesday's analysis video for Wednesday, I'll leave the link on the top right corner of this channel. Right, if you go and see that video, we specifically discuss that today the candlestick is weak and bears might make a comeback. And if you know, we have been discussing this price action from past how many sessions, that this is the only fear which I have in the market. So I also have my prior video opened up here. Outlook for 11th, today is 13th. We posted the outlook for Wednesday's market, right? uh, so in this video, the first, at when Nifty was at 25,916, we mentioned this for the first time, that this is the only fear which we have in the market. And let me take you back to our Telegram group, where we first published this. The only fear we have this now is, if this will happen, we will catch the signs very preemptively. If you can see that, we anticipated that the markets might turn around. Because why? I'll tell you the reason exactly why. Because if you see, you have to understand the psychology, behavior, the mass mentality, right? Why I tell you? Because after this trade deal gap up, it made a very big red candlestick. I kept this out of consideration, but post that we saw, three candlesticks which were essentially, it did not have any significance because the markets were creating lower lows and lower highs, but we were not closing below prior daily low. But these three candlesticks were a total sign of weakness, right? Because if you essentially see, strong candlesticks forms how, like, this candlestick is a strong candlestick, this candlestick is a strong candlestick, these candlesticks are strong candlestick. If you anytime see candlesticks like these, right, these are weak candlesticks. So whenever you see a pattern like this, weak candlestick, weak candlestick, weak candlestick, by how do you analyze that the candlestick is weak? Let's suppose this is the candlestick. If we are forming a doji, it's a weak candlestick. If we are forming a candlestick like this is a very bullish candlestick. So a candlestick with bodies on both of the sides is a weak candlestick, right? So understand the price action behavior here. If the bulls would have been strong here, they would have made good candlestick. Naturally the bulls were weak at this point of time, and the bears, they sensed that yes, the bulls are not strong at this point of time, and they started hammering the markets. Simple, right? And at this point of time, exactly, we mentioned that bears might come back, and that's what, even my if you I'll take you to my videos. If you see from my thumbnails, are bears making a comeback analysis for 11th, huge breakout. This was a green thumbnail, but inside, if you see this video, I talked about that how the markets can correct. Then I think yesterday's analysis video, bull trap, right? So understand the mass mentality, understand the psychology behind the price, what the markets are making. Unless and until you understand that, you won't be able to anticipate in the market, or maybe understand what the price is saying. All right, getting my point? So now let's come back to the discussion. All right, uh, let's go to weekly time frame. On weekly time frame, if at all, as a ritual, what we try to do is we mark the 50 percentage of the prior weekly candlestick. Since it was an event based candlestick, we should not do this, but okay, fine. The 50 percentage retracement of prior candlestick is 25 470, and today we have exactly closed below it. So it is a sign of bearishness, right? So how to trade next week? All right, so we'll mark 26,000 level, the only level above which you have to think of going bullish on a swing basis. On positional long basis, all time high, which is 26,360. These are the two levels which you have to take care as a bull. If the market starts sustaining on daily basis above these two levels, you can go swing long above 26,000, and you can go positionally long above 26,360, right? Don't try to unnecessarily long the market unless and until we cross these levels. See, me coming here and telling you the levels is fine, but it's of no use unless and until you follow it, right? Markets open, okay, on 1 hour you see a very good price action, and you long the market. Let's suppose you would have long the market here, you would have got trapped. So before any trading day starts, make your strategy, make your plan. I can tell you the levels here, I can discuss the strategy for Monday for the next week, but it's up to you that how do you execute it, and what discipline you carry in the market. When it's mentioned that you do not have to go bullish unless and until we cross 26,000. See, many people, the basic mistake in psychology, or in thinking, or in approaching the markets, traders make is they think that the markets are making a bullish pattern like this. Oh, we have missed this much rally. No. If the markets, don't think it like this. If the markets are crossing 26,000, you will have much more strength in the move, and you will have much more probability to win that trade. And if the markets are moving above 26,300, you have an open sky to trade. Don't think that if the markets are rebounding from the downside, that you are missing some points. No. Let the market cross a single level. Correct? From that perspective, let's go back to the weekly time frame, right? And unless and until markets are going back above 26,000 and closing a daily basis candle, see what might happen is on Monday. Let me go to the daily time frame. What might happen is, you might go up like this, but you might close a candle like this. This is a pure trap. So unless and until we close a candlestick above prior weekly high, we cannot go swing bullish. The moment we close a daily candlestick above 26,000, we are clear for 26,360. Any candlestick above 26,360, we will straight go to 27,000 and 28,000, because it's been a long time we have been moving in the same range. All right, traders. And let me also draw a trend line kind of thing from bottom, which we are seeing this as here. So this is a trend line from which we have been taking support from very long time, and now if this comes into danger, we might see a long bearish run in the markets, right? This might be just the start of a long bearish market, unless and until still we have not closed below prior weekly low. So we cannot say that it's a it has formed into a bearish market, right? Now talking about the bullishness in the market, how do we get to know? We'll discuss this on the daily time frame, but how do we get to know that the markets might be moving up? We'll discuss that on the weekly daily time frame. But for the downside, it's very easy to trade on the downside. The prior weekly low is 25,450. Any move below 25,450, the markets should go in continuation till 25,000, right? Till 25,000. And any move, if the markets they try to break 25,000, I think pretty much we might see a good move in the market till 24,500, 24,300. If at all we try to break 24,300, below 24,300, I don't see any support till 22,500. That's it, right? That's the levels on the long term. Let's go back to the daily time frame, and on daily time frame we are making a picture perfect bearish price action. Yes, I repeat, we are making a picture perfect bearish price action. I'll tell you how. See, this was a classic distribution in the market. We broke down this. If at all we would have crossed, see, swing, where you have to look, where is the swing high? This is the swing high, this is the swing high. If at all in this pullback rally, if at all we would have crossed this, we would have broken out and then would have taken a pullback, then this would have been a proper bull case. But we didn't cross the prior swing high, rather we are now making a swing high. This is the latest swing high, which is the level of 26,000, right? So the markets are trying to make a picture perfect double top classic pattern like this. And we discussed in prior weekly analysis video that markets might form a rounding pattern from the top, which is a bearish pattern, but the markets are showing a very relatively sharper fall on the downside, which is a classic M pattern. And this M pattern has a neckline at 24,500, right? So this is the price action which we are forming. This is a picture perfect price action. When will this bearish pattern get invalidated? Is this is the probability number one. When will this pattern will get invalidated? If something bullish comes in the market tries to take support here, and we start moving above prior daily high. The prior daily high is 25,630. Today's high is 25,630. We have a gap above 25,630. So on Monday, if we try to move above 25,630, we can do a short move till 25,750. But how to trade this move, we will look on hourly time frame. But on weekly time frame now, since we have marked this level, which is 25,630, so any move, any daily candlestick closing above this, there is a high probability that we might do this. That's it. All right, traders. So we discussed that on the basis of uh, how will we get to know that we are slowly going on the bullish side, that we will discuss this on the daily time frame. This is the level. If on Monday or Tuesday the markets close a candlestick like this above prior daily high, it is a sign that we might do this short covering. And if we start to sustain above 25,750, highly possible that we might do this move also. All right, I hope I am able to make myself clear with this strategy, right? Because where are the major call sellers accumulated now? If at all you see, the major call sellers are accumulated at prior daily high, which is 25,630. So if at all the markets will try to cross 25,630, you can see a move till 750, 760, above 750, 760, clear cut move about 26,000. So if you want to trade this bullish move, you cannot straight away go long here because you do not know that markets might fall here or markets might go up here, right? When you will get the sign, when the markets will start moving above 25,630. Any early close above 25,630 on Monday or on Tuesday, on any day, anytime, you can trade till 760, but this will be a 100 point short move above 760. So we will discuss this on early time frame, that how to trade this bullish move. But whenever the markets will try to go up, they will face a stiff resistance. So now I will help you mark some sharp resistance zone which you can, you know, use in your intraday trading. And why I'm helping you in marking these zones, because whenever the markets try to touch this level again, you will get to know that this is a resistance level, and you will see that this is a good shorting opportunity in the market. That's it. So whenever the markets will try to come back to this level, the first thinking should be to short the market, because it is a sell on rise market. If at all we sustain here and we start crossing 760, 780, then take a bullish trade here and trade this move. All right, don't start just trading above 25, 640, 650, because we have a gap. Yes, we might do that in the short covering, but we also have to keep this in mind, that above this 25, 640 we have a stiff resistance at 25, 760, right? So if on Monday, if the markets take a support like this, try to short the market here and, you know, be in the trend. Getting my point? All right. On the downside, I have already told you the levels. Below 25 400, there is a gap till 25 100. If at all Monday we open gap down below 25 400 or 460, this will be a very clear cut move for you guys. But if you open flat, the no trading range will be this for you. You can start, you know, thinking about bullish entries above prior daily high, which is 25 650, but it will be a little risky because this complete zone is a resistance zone. The moment you will hit 25 760 above 640, you will hit a resistance, so there's no point going long. So go long only and only we sustain about 25 760, which is this red zone, right? On daily time frame, if I remove each and everything, the markets structurally are looking for a sell on rise. But since we are at a good support level, if you see this was a good support level, we might see a small bounce from this perspective, but look for sell on rise opportunities for the next week. As the daily closing is bearish, the weekly closing is bearish, right? For the downside, I've already mentioned you. Let's go to early time frame and see what can we see in the markets. See, on early time frames, we'll get a picture more clear. Any move below this, we have an unfilled gap like this. So this markets will do like this. Any move below this, we will definitely do a move like this. So this is a pure good trading opportunity for Monday. If at all you open flat or slight gap down, wait for any closing below 25 450 460 on 30 minutes or hourly basis. The moment you do that, it will be a very sharp move because there is literally no support here. That's it. So this is a gap based trading strategy, and with experience and with time, understand this thing. Whenever a gap is created, see, when the markets will come in this area, there are green candles here, means there is a bull here which have created a support in the market naturally, right? But since there is no candlestick here, there are no bulls here. It's just a gap. So that's how gaps get the treatment. If at all we start coming below it, it will be a very easy move to trade, right? But if at all the markets try to take a support, because it's a psychological level, the support might come till 650 or maybe max to max 760. This will be a good point to short the markets like this. That's it. Simple strategy. So I have told you that what is the only level above which you can go fear free bullish. It is the level of 25 760 or 26,000. If you are someone who is a swing player or who is a positional player, wait for the cross of 26,000. About 26,000, any daily closing, you can capture 1,000 points till 27,000, 28,000. That is the golden trading opportunity. I'll be there with you. I'll be posting the video. I'll tell you when that happens. But unless and until it happens, don't trade for the bullish move, right? All right, let's go to 15 minutes time frame and discuss that on the basis of opening, that how can we trade the markets. If at all we open a big gap down, then again you won't have any opportunity. If at all we open roughly around here, we will certainly hit 25,100 because that will be the gap covering level. We will definitely take a support at 25,100. So this support might come from 25,100. So if at all we are opening a very big gap down, half of the trade will already be gone from your hands. So don't try to touch the markets. If at all we are opening a flat market, wait for this range to get cleared. Any move above 25,650, we can go till 760. It is your choice. You want to trade till 760 or you want to trade above 25,760. But any big gap up which will happen in the markets, it will try to first get a sell off, because if it all, let's suppose we open roughly around here, it will be the area of volatility, because markets will be opening at resistance. Too many bears will be there in the market. They will try to first bring the market down. Then at this point, prior daily low, if the markets, or prior daily high maybe, if the markets try to take a support, if you see on 15 minutes time frame any bullish price action, then only try to go bullish. I hope you have understood the sentiment. Let's go to Nifty Bank. What is Nifty Bank doing on VT time frame? I'll clear all the levels here. And Nifty Bank also, the story is the same. We have formed a negative candlestick on the top. I'll give you the levels here, but I'll not discuss the psychology because the psychology is already discussed. Any move above 60,900, you can target 62,000 on the upside and 63,000. Any move on the downside below 60,000 now, you can target the first level as 59,500, and below 59,500, 59,000. This is the price action. This is the plan for the next week, because Bank Nifty does not have weekly expiry, so it generally moves in uh, 500 points batches. So we discussed yesterday, if you guys remember, that we are moving in a range, and if at all we break down on this range, we can do this price action. That's called the box trading strategy. And on the daily time frame, the Bank Nifty has broken down of this range, so look for sell on rise opportunities on Monday. If at all you see a slight pullback, roughly try to short at this level. We'll see on hourly time frame what is the level, but try to short for this kind of price action on Bank Nifty. Bullish, only and only go bullish above swing basis above 60,000, but prior daily high 60,600. Above 60,600, you can see a 300 point move till 6,900, but ultimate bullish, you can only go above 60,900. That's it. Let's go to hourly time frame. Hourly time frame, if at all we start moving above 60, I think let's keep this level as 6,500. You will get the first sign of markets going as bullish. But if at all the markets open a gap up or take a support like this, and markets are forming a negative price action here, try to short the market here for this range, for this move, right? All right. Let's go on 15 minutes time frame and discuss on the basis of opening. If at all we are, because Bank Nifty is relatively stronger than Nifty, no doubt in that, because Nifty is becoming weaker day by day with the help of IT, with the help of mid caps and small caps, the broader market. But as I'm saying, Bank Nifty is less weaker than Nifty, so you can look for bullish opportunities in Bank Nifty little bit early than Nifty. So if at all Bank Nifty tries to go above 6,500, we can essentially hit 61,000. But if at all we try to break 60,000, we can go 59,500 and 59,000. No trading range for Bank Nifty is this one. Don't trade this range. That's it. All right. Now coming to Nifty IT index, what to say? Nifty IT is very very bearish. I've already discussed, but that this is the kind of price action Nifty IT is forming. A classic head and shoulders pattern. If this head and shoulders pattern gets a breakdown on the downside, we can anticipate a projection on the downside like this. Simple. But we have been falling in Nifty IT, and it tried to take slight support today. It tried to form a very bullish candlestick. It's not a bullish, but it's a pullback just. If on Monday we try to do this, if we try to do this, it will be a long bear run, and it will be definitely supported by Bank Nifty if Bank Nifty breaks below 60,000. So overall Nifty Bank also looks sell on rise. IT, I think still, because since IT has been falling from long time, Don't try to look for shorting opportunities. Maintain a pause. If at all we try to go below this range, below 32,000, maintain a sell and rise approach. That's all I can say in Nifty IT. No recommendation, just my pure view. For Nifty Auto is looking strong, but we have made, as I'm saying, we have made a long wick on the upside, right? So long wick means selling has come from the upside. If you see this one, maintain a sell on rise approach in Nifty Auto unless we cross. I'll give you the exact level, 28,620. Unless we cross this level, maintain a sell and rise on Nifty Auto. Metal was the strongest sector, but yes, metal also now is showing signs of profit booking. Maintain a sell and rise. See what I if you see this price action, can you see these candlestick? Now, can you anticipate that these are some of the weak candlesticks, right? So unless in Nifty metal we cross back above 12,300, don't try to enter. Maintain a sell on rise approach. Small cap negativity has come from the top, wick has been formed, daily time frame. Maintain a sell on rise unless we cross above uh, 8,500. Simple. Sorry, small cap. Mid cap, same story. Unless and until we cross our prior weekly high, which is 22,500 round number level, don't try to go bullish. So overall, including Nifty, even banks, IT, auto, metal, small cap, mid caps, everything is around rise. So total, I think overall, if you look at the markets from a holistic view, we are looking for a rough week ahead. Let's analyze the change in OI data. For the change in OI data, we'll definitely look at the option chain. But if you okay, the data also has adjusted. All right. So it is the official adjusted data which comes after 7:30 p.m. But it has already come. 5 CR addition of shorts in Nifty and 11 lakh of unwinding. I have never ever seen this much bearish data. So if the global markets do not, what is Gift Nifty doing? Okay, 41 points up, thank God. So if I think CPI data has come, let me look at the global markets. I think CPI data has come out to be very positive. Okay, but it has not. It has made the markets green, but it has not made the markets that much bullish. So we are the Gift Nifty is up roughly around 39-40 points. That's okay, but data is very bearish. No hope from the data. If you can see strong resistance at 25,500, so even if we open a gap up of 100 points, I don't see a gap up of 100 points. Even if Gift Nifty shows, I think the pre-open will be very bearish. Strict resistance at 25,600, almost 1.2 CR additions of shorts. If it all you look at the total open interest, huge addition at 25,600, huge addition at 25,500. The bears are just ruling the streets, right? Bank Nifty, Bank Nifty, seeing the data, Bank Nifty can be a perfect candidate to short on Monday. If at all we even open 200 250 points gap up, short Bank Nifty. This is not a trade recommendation, it's just my view, because if you see the data, 16 lakh of longs have been unwinded, double of what shorts have been unwinded. Shorts have been added. The biggest short have been added has been added at 6,500. So any move till 6,400, 6,500, I think that's what we discussed also. Any move till 6,400, 6,500 can be a good shorting opportunity from here till this move. Got it? Total open interest, huge unwinding from 60,000 and good additions at 6,500 shorts. All right, traders. So this was the complete analysis for Nifty and Bank Nifty. I will post a separate video for probably gold and silver. But on a holistic basis, if you see Bank Nifty, if you see Nifty 50, IT, auto, metal, if you see the broader markets also, mid cap, each and every market is looking bearish. it's looking for sell on rise. So unless and until we go uh, you know uh, above 26,000, I don't see any chance for bulls making a comeback in the markets. That's all we I have to discuss here about the markets. If you have liked the video, leave a comment, like the video. If you have not subscribed to the channel, subscribe to the channel, right? Share it with your trader friends. If you believe in us, if you believe in the channel, if you believe in the analysis, by God's grace, whatever we have been analyzing, whatever we have been discussing, it's going by that direction. We anticipated a move like this, it came. But one thing to remember in the stock market is, as a trader, I have been a trader in the markets from past 4.5 years. The markets are very simple. Every look the markets from a probabilistic view. Every move which happens in the market, it happens with a probability. Nothing is like, oh, I believe in this view, I think from my guts that it will go bullish. Yes, you might think that it might go bullish, it might go bearish, but what if it does not happen? Right? Are you prepared for that? So just look at every move of the market as a probability. If you think that a certain bullish move is highly probabilistic, so also think that there is a probability that it might not go bullish. So factor that less probabilistic move also. That's how you will manage your risk. All right, traders, that's all from my side for the next week. I hope you stay safe in the markets. Cheers. Good night, good evening, happy weekend.